this is Surya Saha, and welcome to the Insurtech Story Podcast, the platform to spread knowledge on insurance innovation, digital disruptions, and entrepreneurship. Our website, theinsurtechstory.com, and we are available on Spotify, Apple, and Google. Today, we are going to discuss on the topic how data is shaping the future of India's auto insurance. And for now, I'm delighted to welcome our guest, Sanjay Bharti, who is a senior director at ACO. Welcome, Sanjay. We are truly excited to have you for the show.
Thank you. Thanks, Surya. It's a
Uh,
pleasure to be on the show today. Yeah,
would you like to, introduce yourself and tell a bit about what's your role at ACO?
sure. So I'll just give a brief around how my journey has been. It's been over a decade since I have been into auto and insurance in particular. And before joining ACO, in fact, I was running a company which was into the automotive field, and we were trying to sell cars online. And a core part of selling a car online also included selling an insurance online. And probably that's how we came in touch with ACO. And I started a new business vertical called ACO Drive under ACO Technology and Service Private Limited, which was basically around selling new cars, particularly selling insurance also online and delivering a car directly at the doorstep of customers. So I almost gave like 3 years into this particular vertical, followed by electric vehicle charter under ACO, wherein we are doing a host of things under the electric initiatives, right from insurance, obviously, since we are an insurance company, but we are also looking at how we can contribute as a digital player to the complete ecosystem of electric vehicles,
Right.
because electric vehicle the whole ecosystem is very new, nascent. There is a lot to be done, and it is kind of a responsibility of all of us together to come forward and build for the ecosystem and make it sustainable for at least like the next 50 100 years until there is another new technology which is in after that. Yeah.
Yeah. So, your perhaps your career was primarily focused on insurance and into the auto sector, as you mentioned.
Yeah.
Uh, and you also mentioned the segment of electric vehicles, which is one of the prime importance in the coming days. So,
Mhm.
going on to this discussion, what do you think is the future of auto insurance, especially in the
Okay.
Indian region, looks like, and particularly from a
Mhm.
driver's perspective in India with the invent of data and analytics?
Mhm. So typically, if you see, auto insurance has been very, very bucketized, I would say, to put it in that way. That there was no underwriting mechanisms on a specific personal level of people. The underwriting technology was more based on the geography, the area broadly, whether it's a rich area or a middle class area,
Hmm.
and what kind of profession people were dealing. They were, in fact, I would say not even insurance companies didn't even go till the point of seeking out what profession their customers had. It
Hmm.
was broadly just on the basis of the area and their general understanding that, okay, this should be the premium amount for the people of this region. Say, for example, Bombay would have a different premium than what Bangalore has. And that was the only categorization into the pricing of insurance broadly. But over time, uh, I wouldn't say it has kind of progressed gradually, but yeah, after specifically us coming into the picture and other new age insurance players coming into the picture, this has grown drastically into a form where
Right.
people started looking and considering what are the other attributes. Because if you see, technically, insurance is uh, insuring something of an insurable interest. When I say that technically, it's too jargonized, but yeah, if you say I am basically insuring something which is of value to you, and how I determine that value and how I determine what how much I should charge you should be based on your particular lifestyle, your behavior, and a lot more other attributes.
Yeah.
And that is what we brought into the picture. So, where do you stay? Which company do you work for? How much do you use your car? How much do you use Ola? because if you use Ola more, then you would be probably driving your car lesser, right? And how are your spending habits online? How much do you stay in hotels? How much uh, cleaning services are you utilizing at your doorstep? And
Right.
all of these things together, we have done major profiling of people across geographies, I would say. We have a lot of internet partnerships. So ACO is not only into auto. If you see, ACO
Yeah.
has tie-ups with the likes of Amazon, Ola, etc., and a lot of other startups also, where we have micro products. And all of these micro products together, I think, definitely contribute to the fact that we are able to profile customers into different buckets and price them differently. So, to answer the question, Surya, it would be basically that earlier it was not that personalized. With
Hmm.
the advent of new age digital insurers coming into picture,
Hmm.
uh, the capability of getting that data online also went up, right? Because earlier, because there were no digital aspects or digital areas where you could get these data online.
Yeah.
With the advent of these new insurance companies coming into picture, the ability to get all of this data easily on a scale through digital methods also became easier. Say if Amazon or the other partnerships were all brick and mortar businesses, it would have been so hard for an insurance company to go collect data from different places and put them all together into a model. So definitely tech has been a very plus point over there, I would say, a boon, I would say. And because of that, we utilize the data across different places and are today, I can say proudly, at a position where
Hmm.
we are able to price insurance differently for different customers. And we take all of these data points into account. So the industry has, I would say, completely moved out of that bucketized system of pricing insurance to a point today where they are able to understand each and every customer individually. And since you're able to understand each and every customer individually, you're also able to price them better, give them benefits of being a good driver.
Hmm.
And that eventually comes down to the last point of the discussion, Surya, that now data and analytics is playing even bigger role, right? With every step into the future, the more and more data and analytics that you could put into understanding a customer, the better and better you could price, and the better and better products also you could build for the
Hmm.
customer.
Yeah. Talking about auto insurance, in a country like India, that's one of the major products that people actually opt for, even not just as part of the requirement, but also as part of the regulatory norm that you must have an auto
Mhm,
insurance to
mhm.
take your car on the road. And a
Correct.
developing digital environment, as we see it, it tends to enable the insurers to use the information they obtain from various platforms, right? For example, any
Mhm.
sensors, telematics devices, and so on
Yeah.
and so forth. And that can help for a more comprehensive experience to the customer. But do you see this in reality solving the customer service challenges in this particular
Mhm.
auto segment in particular?
So I would put it this way, Surya, if you see the amount of digitization and the amount of internet digital consumption has increased like anything across tier 2, tier 3 towns also in the last decade.
Yeah.
And the more and more digital products are being brought out, a lot of companies think that, yeah, this guy is from a tier 2. Will he be consuming this product or not? And to your surprise, we are seeing that people have also started purchasing things online in tier 2, tier 3, which was not the expectation when TikTok, the likes of TikTok came. People thought that, okay, yeah, because of free internet, people from tier 2, tier 3 would start consuming more data, but they would not be transacting customers. They would not be able to put money into the products online. But that has also changed. We have seen a change in that behavior also, which is why the advent of insurers like us
Hmm.
brings a lot of sense overall, building a complete digital journey. And
Right.
making that complete digital journey is not only about sale. Exactly the way you've asked, it's not only about the sale. It's about becoming a pure digital insurer. A digital insurer is not only an insurer who can come online and say, that yeah, I have this website. You can come over here. You can buy your policies online. It's not about that. It's about how do you complete the whole insurance journey. So, for example, an insurance journey would for a customer like me would be I go, I buy a policy for my car. I check the inclusions of the policy. I understand about the inclusions of the policy without any human intervention whatsoever. I
Mm-hmm.
select whatever add-ons I want. I do my policy. I get it not through a courier, not through a mail. I get it online digitally in my hand right over there itself into my app. And as soon as and God forbid anything unfortunate, any accident or something like that happens, I don't have to pick up a phone and call somewhere. I am enabled through an application. I am enabled through the website itself to raise a claim. I
Mm-hmm.
go into the app, I go into the website, I put my details, or I am logged in into my account. I raise a claim there itself. Now, from raising a claim to fulfillment of a claim, there are a lot of offline,
Mm-hmm.
like a surveyor is required, an inspector is required. There might be cases where police intervention is also required. So, how do you digitize all of that? Is basically becoming a digital insurer. In our case, in ACO, you can easily raise a claim on your mobile.
Mm-hmm.
You are also given the details of the service advisor. You can get in contact with the service advisor. Service advisor will come and pick up your car and take to a garage, bring back the car to your house in 3 days. So effectively what we say is that you don't have to get in touch in an offline way with any person whatsoever. Everything could be done online, from your purchase of an insurance to your claim raise to the fulfillment of the claim. Everything is done online, and that's what we say when we say that we are a digital insurer.
Right.
We we mean digital not only in the aspect of sales, but everything from the sale till the fulfillment. Everything has to be online.
Right. Yeah, of course. I mean, when we talk about Insurtech and when we talk about India, I mean, Aqua is something that comes in the mind first to be pioneering the journey here, right? So I think you guys are doing a great job with respect to the customer experience as you spoke about in auto. And
Mhm.
and on the same context, I also would like to bring in some of the rather case studies that's happening the other side of the world, which in the western side, there are companies who are trying to use technologies like telematics and IoT. And telematics is an important development, particularly in the area of auto insurance, right? So do you see data and analytics helping this technological advancement get a market-wide acceptance in a country like India? Because the dynamics, the demographics are quite different than other parts where it can be easily implemented, like telematics. But how do you see it's getting an acceptance in a country like us?
So I would like to put it that way, Surya. So any industry that develops goes through a series of transitions.
True.
Now the series of transitions generally are not are very step based. I would put it like that. The transitions are usually always step based. So you go from the first step to the second step to the third step and then to the fourth one. And it's very rare, although we have been seeing that in a lot of industries in India, that the step jumps have been occurring. But especially in the case of data and analytics with respect to insurance, I would say we are fairly conservative and understanding that see, insurance is a very important product. It's a very regulated product also. It is bound by the government. It is bound by an insurance regulatory authority. There are a lot of things that you have to think about when you bring products. Every product that you bring into insurance has to be first verified and signed and stamped by the authority, which says okay, you can go out in the market with that. So, although the IRDA, which is the Insurance Regulatory Authority, has said okay for drive as you go kind of motor policies this year, but introducing the complete telematics and using that data into the insurance pricing, I think it's a little ahead of time at the moment. Maybe in a span of 2 years or 3 years, we would reach that position where we start inculcating all of that data. But to answer the question, I think. Telematics is something that we are also very close to. We have been looking at that space at least for over a year, and we have certain ideas on how it could be used. And that would be taken into account in the coming years broadly. But as of now, the kind of maturity that the market has, I think, is very well dealt dealt with all the factors that I told you around the usage behavior, internet partnerships, how you are claiming health insurance, life insurance, etc. So all of these data that are there, I think, are evident enough to price the insurance for now. But the data and telematics play, I think, at the moment would not give us that significant step up jump into pricing of insurance, particularly. The more and more the digital market develops, and the more and more maturity comes into understanding uh, insurance across these places, then probably we would be in a situation,
Right.
uh, yeah, so where we would be able to actually utilize this data. What I'm
Mhm.
trying to say is, at the moment, we do have some data, but we might not be able to completely utilize into the pricing of insurance because there are already so many other factors that are being used at the moment into pricing.
Right.
So I'll put it this way: the refinement will come only when you have bigger products into insurance itself. So the way to put it is that all of the things that we are using at the moment, they are giving us a broad 70-80% improvement into the overall pricing and understanding of insurance. The telematics may only give us a slight improvement at the moment, but in the future we don't know how the policies will change, how the insurance pricing etc would change. At that point in time, I think, yes, uh, telematics could also bring us a financial improvement into pricing of insurance.
Mhm.
I'm not saying that data and telematics is not useful at the moment. It's
Yeah.
definitely useful. But how do we put that into a financial equation of pricing of insurance? That is something that we would be able
True.
to better understand in the future.
Yeah. Yeah. I think definitely. I mean, it's certainly in a very nascent stage, and we are still, working
Hmm,
on
hmm,
with
hmm.
pilots, and yeah, especially in a demographic like India, we have to just see how it best works, because pricing is something a major element of the value chain, especially where it comes a B2C kind of a model.
Yeah, yeah, yeah. So you could have the best product in the world, but if it's not financially engineered to what you're selling,
Yeah.
I think as a business, it might not make sense. As an R&D product, definitely it makes a lot of sense.
Yeah.
But how you combine that R&D into the business is the art of
Hmm.
selling, right?
Yeah.
Is the art of business, I would say. Yeah.
So, Sanjay, just one quick thing. Uh, how do you see the market for, auto insurance for the EVs at the moment? How you see
Mhm.
this developing? Because I believe it would be certainly, at some aspect different than the, you know, fueled vehicle.
So I would say it is still um, not very clear,
Mhm.
um, because there are certain challenges into the EV mechanism as a whole. If you see an EV vehicle, you very well know that the engine has been replaced by a battery, and broadly, rest of the components of the vehicle are more or less the same. But we haven't seen the life cycle. We
Mhm.
are still like into 1 or 2 years into the electric vehicle industry, right? Maybe
Right.
2 years, 2 to 3 years. But unless and until we see a whole cycle, say a 5 to 7 year cycle of EVs,
Mhm.
we would not be in the best position to understand how insurance should be ideally priced for them. For now,
Right.
what is happening is, the way most of the insurers, I would say, most of the insurers are underwriting EV insurance is basically that they're assuming the battery to be another fuel type, like an electric fuel type,
Mhm.
and they are assuming that, okay, now the engine is not there, so the battery is there. So whatever is the cost of the battery should be accounted into the underwriting mechanisms, very
Hmm.
similar to the way engine was being
Right.
underwritten earlier, right? So they're just putting all of that equation into the underwriting of insurance. A specific buffer or a coefficient, or say an a pricing angle to the battery I don't think it is there at the moment. Although it should be there, but I think a cycle would also be required to understand how that should come into that direction. As of now, you're taking it as another fuel type.
Yeah,
You are
yeah,
putting that equation into the whole underwriting mechanism. Maybe some companies are placing a little buffer because
hmm.
at the moment we also don't know that how the pricing of how the IDV changes for these vehicles, right?
Right.
Because with the electric and the ICE internal combustion engine vehicle, both of them are say as a new vehicle 10 lakh rupees. I have an idea that how the ICE vehicle is going to depreciate over 5 years, right?
Hmm.
Because that's how you do the used car market. That's how the whole sales of used car is done in the market. Because you know that broadly, okay, 10%, 20%, 30%, 40%. At the end of 5 years, a car would be say half of its value. An ICE
Yeah,
car, because you know the value of the engine after 5 years. In an EV vehicle, you don't really know how it's going to go down because a lot of people, a lot of companies also are assuming that after 3 years or 4 years, maybe the battery is of no use to you because the state of health would go down below 70%.
yeah,
So if the state of health goes down below 70%, you might as well be in a position where you are getting some range, but it's not really optimum, and you have to keep charging your vehicle very often, very much like a phone. Say if you're using a phone for 2 3 years, your the battery capacity goes down, and you have to keep charging it again and again. So you don't really also know how the industry would react to such a situation after 4 years. Maybe we are at a position over time at that particular point in time, in fact, that we say that okay, we should replace these batteries completely and not use them at all. But how the government puts it versus how the market absorbs it, these are two very different things, and that could only come forward with time, I would say.
yeah. True. I think, as a country, as we start to embrace this EV adoption,
Hmm.
the change in consumer behavior, especially the Gen Z, I think they would actually, drive this transition to such kind of a, segment as we look at.
Definitely,
So it's
definitely.
certainly a time game, and we have to see how it works, and accordingly, insurance will, take its course.
Yeah, because the market is too nascent, I would say. At
Yeah,
the moment,
yeah.
people don't really know how the car is being priced, how the insurance is being priced. It's a block mechanism. It's
So
very much like the way insurance was being underwritten until now on a bucket level basis.
yeah,
So
yeah,
at the moment, people don't know how. So you have different mechanisms, you have different technologies in batteries, you have LFP, you have NMC, you have different cell compositions, etc. But everybody is just trying.
yeah.
Everybody is just trying and figuring out what works best for them. So I think it's just a matter of time before we would be in a position where we could say that okay, yeah, this is how the electric vehicle insurance in particular should be different from an ICE insurance.
Yeah.
At the moment, it's only the risk buffer that is differentiating them. Over time,
Yeah.
the underlying technologies might also become a factor to differentiate between the types.
Well, thanks so much, Sanjay. I mean, fantastic discussion. Thank you for sharing your thoughts today. A true delight to have you as a guest.
My pleasure. So yeah, pleasure.
And lastly, to wrap this up, thank you for listening and see you at our next episode. Take care and stay safe. Goodbye for now.